If you have been struggling with forex trading, perhaps you have not narrowed down your point of interest, because a point of interest is key when it comes to becoming profitable in the forex market. And in this video, I'm going to show you the best point of interest that price respects before pushing out, and that is supply and demand levels, or the opening price strategy. So I'm going to show you with illustration with 3 different variations of POI that most trader uses. The first one here is an order block. Okay, as you can see, the last price down, last candle down before price pushing up. And most traders will start looking for trade by the time price starts touching the wick of the order block. Why do I not support this? Because the order block itself is not responsible for the push high. Now, the reason is this. Within this order block, there are only 2 prices that price will respect. Because the truth is, if you want to buy anything in the market, let's say you want to buy a particular item, they are going to tell you this item is $2, this item is $5, this item is $10. They're not going to tell you that this item is between $10 to $15. When a supplier or a seller tells you that, oh, you want to buy this mouse, it's between $10 to $15. You'll be like, what's going on? Give me the correct price. The same thing is happening within the forex market. Most people approach forex as if the item they want to buy is within the range. Okay, I will be buying within year and year. Learn to pick a particular price, all right? And that price will be the main price where market will respect and move. So within this order block, I have 2 prices there. Why is 2 price? It's because we have the number 1 here, the reversal opening price. These are where price will respect. These are the reason why price will move, and not the order block itself. The next one is the reversal opening price. Okay, so most of the time, I prefer waiting for my reversal opening price. Okay, that will be my single price. When price come back down here, it moves. Number 1, 2 things it does for me is that it gives me a higher risk to reward, because if you put your entry here, for example, your stop loss will be somewhere down here. But if your entry is delayed a little till this is filled, or the next one here, you have a better risk to reward. So when price comes in, these are the 2 prices that will be responsible for the push higher, and not the order block itself. You need to understand the anatomy of market, the anatomy of the market. What do market respect? Market respect the time and what the price at the particular time, and most times the time is not even relevant. The key thing is the price. When it gets to that price, regardless the time, price will fly. Regardless the time, price will fly. The next one here is what we call the hidden base. Hidden base. All right. We have a push up, bullish candle, bullish candle. We mark out the 2 weeks there. And then most traders will be looking for entry at this level. Yeah, this is good, but at the same time, these are not the reason why price respected this area. The reason why price respected this area is because of this continuation opening price. So price came back down, tap in here, and then fly. So instead of you looking at the hidden base, just narrow it down to this continuation opening price. Another one is fair value gap. This is overrated. More like hyping a player who does not know how to play football. That is what fair value gap is. It's the least profitable among all of the SMC concepts. The fair value gap is the least. Quote me anywhere. In fact, this will lead you to what some people will call a smart money trap, but I don't care about the word you use. The thing is, they mark out the wick of this first candle and the wick of this third candle, and then they take an entry once price approach here, and most times the stop loss will just be below the fair value gap. There are 2 prices there, 2 demand level that price will most likely respect before moving high. The first one is this level here, the continuation opening price. Price may decide to come in here, tap in here, and then move without touching your fair value gap. This has happened to you a lot of time. You have your entry at the fair value gap, but price didn't come in there. Some people will even say take the 50% of the fair value gap. It makes no sense to me because I've been in the trading industry for over 10 years now. With my back testing knowledge, this is the least favorable. I know some people focus on fair value gap, and if it works for you, fine, continue. But if you are here watching me, I would like you to have a different orientation. Now, when price even go deeper and tap into this one and push, most people will say the fair value gap is the cause. Whereas the stop loss here has been taken. When you place a stop loss below this level, price will come take it, and the fair value gap will serve as liquidity inducement for this level here, because a lot of smart money concept traders will be looking for entry here. The smart traders I've seen who trade this SMC concept do not even consider looking at the fair value gap. Many of them I've seen a lot, and I respect them. They are profitable, but most of them do not even use this. So why are you wasting your time with this? This is more like liquidity inducement. I'm going to make a video on liquidity inducement, and this will be included, because a lot of people will be trading in here looking for buy in here, whereby you just have to wait for this to be triggered. Then on the sell side, we have the bearish order block here, same concept. So in this case, most SMC trader will look for trade here and stop loss above. But I always say, wait for, if possible, wait for this reverse opening price. This will begin the move. This will begin the move. Okay? So we have two prices here, because price will move at a particular level, at a particular price. The most important thing is price, and that is where price will move. When the market gets to a particular price and it sees that price as the best price, it will move. Okay, that's why when you open your trade and you take a trade, the market shows you are buying at a particular price. They won't tell you you bought at a zone. Okay, they'll say you are buying at a particular price. All right. So the same thing here with the hidden base, bearish hidden base. Focus on the continuation opening price and forget about the wicks here. When price tap in here, if price will move, it should move immediately. Then the bearish fair value gap. Wait for price to take it above here. And if there's any confluence at this level, I have ways of knowing my confluence. Price will just tap in here, and then those looking for fair value gap entry will never get an entry. So let's take a look at the market. Let me see. Let's look at Euro USD daily. Let's look at the daily time frame. Okay, so let's take a look at this. Now, looking at this fair value gap now, this fair value gap. If you are to take an entry within this fair value gap here, as you can see, we have reversal opening price below the fair value gap. When you entered here and you are putting your stop loss somewhere here, let's assume your stop loss is here. Those who trade fair value gap, their stop will be taken. Tap into this. As you can see, immediately price got to the reversal opening price, it started flying. It started moving. That is the indication the market is looking for. That is the price the market is looking for to start pushing higher. Simple as that. And not the fair value gap. Now look at another fair value gap here. Look at another fair value gap. Price played in there for a long time. Even came out of it. Now some people say, oh, the fair value gap held. Yes, it did. It held because of this. Price came tapping here. Immediately price took this level. It rallied straight to the upside. All right. Now in this case here, you can look at this as an order block as well. And as I said, what was responsible for the push is not the order block. Though if you have traded this order block and you are profitable, like, yeah, order block worked. But if you narrow it down to the anatomy of price movement, this is actually the price needed. And you can see little or no drawdown. price rallied up. Reversal opening price, yeah. Price came in, close above is a sign, you push up, yeah, the same thing. In this case, SFC trader may not get the entry within the daily. Maybe the entry will be within the lower time frame. But on the daily, the moment I see this happening, I know that a big move will be coming in line with my rules. Okay, I have rules that will tell me that okay, market is about to start pushing. Because if you start looking for entry at every opening price, you will lose. Okay, don't just go to the chart and then start taking all your entry at any of the opening price. I will not recommend that. So what I recommend is, first of all, we are assuming that the market is about to move, but we want to capitalize on the best price. Okay, so this example is simply looking at, we assume the market is bullish, and then we just want to backtest and see where the price started moving. If you look at this level here, you can see immediate price got to the reversal opening price, which is the demand level. You can see little or no drawdown. It pushed higher. Now, fair value gaps, yeah. We have fair value gaps somewhere here. Let me take care of this. It went up. Yeah, fair value gap is working. But remember, this level was there, but this was not strong enough. Okay, now if you don't understand the anatomy of the market, some of those people might be holding price. Yeah, price was seeking this level. The fair value gap serve as what? Liquidity. As you can see, a lot of traders took this, price came back and then went higher above this. Okay, yeah, there are gaps. Whenever there are gaps, you just simply go to the closing price. Simple as that. All right, same thing here. You can see price respected this level. I will look for a continuation. Let's see. Like, yeah, currently price is here, but for this video I'm expecting there's something I'm watching out. If it happens, Euro USD will start going low. But if that do not happen, you can see price is struggling with this level. It's struggling big time with this. Okay, and now another reason why I want you to be looking at price in terms of this is that you can easily cut your loss. Okay, you know that if price, for example, I will ask you now, how do you know that this other block will not work? Okay, if I have a close below this other block, is that the reason that it won't work? Or the fair value gap, if I have a close below the fair value gap, does it mean that market will not, the fair value gap is not respected? All right, you can't build rules around range. You can't build rules around a range, but you can build a rule around the price. So for me, if I have a close below my reversal opening price, I know that market wants to go even lower. Okay, if I have a close above this level here, something in me will tell me, okay, maybe it wants to reach higher to the next one. All right, and it makes trading simple. It makes trading simple. If I go back to Euro USD here, as you can see here, for example, the moment we close above this is an indication that we might be pushing higher. We close above this, price came and retest and then push. These are simply indication that price wants to go higher. You close above this, it's an invitation that look, we might be going higher, and this price did not break below this level. Okay, So with this price level, single price level, you can make rules, you can design rules to guide you in your trading journey. All right. And if you have market close below, especially the reversal opening price anyway, and you can see price came, retest, and then push higher. All right. So in that case now, you can see how the market respect those levels. Those are what make price to move truly, and not the other block, not the fair value gap, and definitely not the hidden base. Okay. For example, yeah, some people will mark out the other block. Yeah. Let's assume everybody wants to be profitable, but the reason why price moved was price tap into this. You can see we have reverse opening price here, and in some cases price didn't get to this point. Okay, but we have the opening price here, and middle price got there. We had the close above, push to this point here, and then push lower. It's a bit, you need to get yourself around it with practice and practice and practice. By the way, with the opening price trading strategy, you will understand when the market is about to reverse. So there are so many things to learn from there. Let's look at this fair value gap. Wow, fair value gap. Demand break becomes supply level, boom. Little or no drawdown. So I will invite you to simply go practice this. If you are using other block, if you are using fair value gap, just introduce this into your trading, and then let me know how you feel afterwards.